Hi again, Bob Forche, Supply Chain Pro to Know, and today I want to continue talking about resiliency, but from a different perspective. When we think about risk, we tend to think about recovery capabilities, and it helps quite a bit to move past recovery. As we talked about in the last video, we want to think about how can we reduce the probability of an impact. So mitigating means we want to be able to think more proactively. And when we look at risk management, it's really common that a lot of companies tend to focus just on recovery, not so much on becoming a shaper of disruption to reduce that, but they focus on just short-term thinking at the supply chain level without really looking at the more global view. What are the other possible impacts out there? So here's a couple of things to think about. If you haven't expanded your discussion around supply chain risk management, we know from data since 2009, 2010, 11, 12, we have a number of reports now that we can refer to. One of the most interesting things that we learned from these reports, supply chain that has seen a severe disruption is likely to experience as much of a 10% loss in income. The cost increase at the same time is probably going to be around 11 to 12%. And the share value could have an impact of a loss of up to 10%. That's a pretty strong motivator for wanting to make sure we are more globally oriented, more cross-functionally oriented to enterprise level view of supply chain risk management to start with. When we think about what are the different levels of maturity around moving into an ERM kind of a picture, enterprise risk management across the organization, early adopters compared to average or laggards really have a big leg up on the different maturity levels here. We know from experience that a leading organization who is more proactive in this management area is likely to see as much as a 95% improvement on forecasting accuracy of cash flow. That's a pretty dramatic statement. And on the other side, those that are better able to mitigate risk and having a more proactive approach are often able to reduce the risk impact to as little as 3%, while their peers tend to be closer to 10%. So hopefully those are tidbits that will get you thinking to maybe think about what the overall focus is and what's the level of responsibility in terms of risk management within your organization. So hope that works, and thank you. We'll be talking to you again soon. Take care. Thank you.